Kulani, I guess this was to be expected. A lot of analysts projected that there would be an increase, largely due, obviously, to the lifting of the COVID-19 restrictions. But we're not yet really quite out of the woods yet, are we?
No, absolutely not. If you even look at the real growth rate that is not annualized for the second quarter, which was 51.7% on an annualized basis, that one was actually minus 16.4%. And when you look at the third quarter real GDP growth rate that is not annualized, 13.5%, it's really not taking us out of the woods yet, which is why a lot of analysts are actually expecting to actually see what the fourth quarter has in store for South Africa. But as we've seen and as we've heard from the likes of the Reserve Bank, National Treasury, the third quarter and the fourth quarter that we are currently on now have done quite well. And I think we do have the Statistician General joining us on the line to actually give us some of his take when it comes to these third quarter GDP numbers. Mr. Risenga Maluleke, thank you very much, sir, for joining us. Mr. Maluleke, are you there?
Greetings, Tammy, and again, greetings, Kolani, and to the viewers.
Thank you, Mr. Maluleke. These numbers, when you look at them, it's quite impressive coming from a very, very low base, Mr. Maluleke. Take us through the numbers with the sectors that contributed the most to the third quarter GDP data that we've seen this afternoon.
For starters, we as StatSA and the Statistician General, any chief statistician in official practice, we don't talk of impressive or bad numbers. We just make numbers available, Kolani. Now, specifically to this quarter, which has returned a 66.1% growth, annualized, seasonally adjusted, and of course, when you look at quarter on quarter, non-annualized but still seasonally adjusted, we are sitting at 13.5%. The main contributors to the headline growth of 66.1% were in the area of manufacturing. Let us look at manufacturing, which has contributed about 16.2 percentage points and returned a growth rate of 210%. And then we look at trade, which comes second, having contributed about 14.6 percentage points with a growth of 137%. Now, mining, while it has recorded the highest growth at 288%, its contribution is only 11.8 percentage points. So these three sectors contributed the most in terms of trade, in terms of manufacturing and mining. And when you look at manufacturing, for example, in all the areas of manufacturing, we have seen positive growth, but not only that, and demands for exports have actually arisen from that when you look at the expenditure side on the economy. But trade, for example, has seen growth in all its sub-sectors.
Mr. Maluleke, one of the interesting parts is, of course, looking back from the second quarter to the third quarter, nominal GDP at 1.27 trillion rands in quarter three, up by 196 billion rands from quarter two in 2020, and also household consumption expenditure rates. Can you please take us through those two?
Let us talk of nominal GDP. We have seen increases in most industries. A decrease that was observed was in agriculture. But we should also remember that agriculture was the only sector that had shown, industry that had shown growth in the second quarter. Household final consumption expenditure is actually recovering, as we can see that over time, when during the lockdown, it was actually under distress, and with movements of people and being able to access services and buy commodities, goods and services, then we are seeing a lot of movements in that direction. Let us look at restaurants, for example, on the expenditure side of the GDP, which have seen a growth in the excess of 7,000. That is your restaurants that were actually completely not operational during the lockdown, especially almost all the stages of fifth level, fourth level, third level, they were not operating. They started operating with limited space as the COVID environment lockdown was being eased off.
And Mr. Maluleke, when it comes to the fourth quarter, I do have a question about the fourth quarter, since a lot of those restrictions have been lifted, and we saw that contribution to the third quarter as well when it comes to the lifting of those restrictions. The lifting has been had quite a tremendous impact on the performance and economic activity when it comes to the third quarter. I know that you don't have a glass ball that you're looking at to actually look at how the fourth quarter will do, but we should expect it to do quite well, since the restrictions are still lifted for the fourth quarter.
I cannot speculate, Golani, on what will happen. The job of the Statistician General is to go and measure and come back and report. And I'll give a good example. Assume we had estimated what would happen in the second quarter of 2020 without knowing there would be COVID. We would have actually estimated things inappropriately and gotten them wrong. So our job is to wait for what happens in the economy and go and measure. And of course, the economy behaves either way in terms of what it experiences, as we have seen in the shocks caused by the COVID-19 environment. One thing that I can say, looking backwards, is that when you look at quarter 2 and quarter 3, they have shown extremities in terms of negative and positive growth, but that's what happens when the economy experiences shocks. So let's wait for the fourth quarter, Golani, and we'll come back and report, and we'll use media houses such as yourselves to talk to the public.
One of the interesting parts about South Africa's economy is when you look at the previous quarters and investments. Gross fixed capital formation has been quite down for consecutive quarters, and we are looking at it now at 26.5%. What has happened with investments in the third quarter?
Generally, gross fixed capital formations experience a lot of negative growth over time. And you can see whenever you drive across the country, the number of cranes that you see up in the sky in construction are not as many. Now, in this regard, is because gross fixed capital formations were recovering from a low base coming out of the third quarter. And as they did so, they showed a positive growth. And as you will observe as well, we will realize that in terms of the construction side, even from the production side, we have seen that construction works has shown a strong rebound.
Thank you very much, Mr. Risenga Maluleke, the Statistician General at Statistics South Africa. Tammy, you heard it from him. We are not really out of the woods yet when it comes to our economic growth, and obviously he can't say really what is going to happen when it comes to the fourth quarter. But when it comes to the nominal numbers that we've seen, the actual real GDP numbers that we've seen, it's quite good. But when you don't have economic growth that translates to job creation, as we saw in the late 2000s, where economic growth was averaging 5%, but unemployment still was on the up, it's actually a big problem.
And as you rightly said, job creation being key there. But I noticed here, Glenn, that finance, real estate and the business services increased at 16.5%. that's a relatively low percentage, especially in comparison with the highest performing air sector, which is mining and quarrying.
And it's a big worry because those have been quite good performers, but not of late. When it comes to this particular year, the first quarter, we've seen only agriculture in the positive. In the second quarter, it was also the only one in the positive, contributing positively. Now, in the third quarter, we're seeing agriculture with that seasonal change actually contracting just a little bit. But when you look at the overall, we need to remember that we are coming off a low base of 51.7%, and when we look at it that way, it's really the fourth quarter that people are going to be interested in, because while we have been moving to the third level 3 to level 2 and level 1, which brought us to the third quarter, the fourth quarter is where most businesses have been actually free to actually, to be active. So the real picture about the entire year is going to be what you call the fourth quarter. And it's still, our projections, the projections from National Treasury, World Bank, Reserve Bank, above 8% contraction for 2020, still higher than the 6.2% that is our record during the Great Depression in 1931.
As you rightly said, we always need to bear in mind that we're coming off from a very low base. It's been a tough time with COVID-19, and all things being equal, with no huge resurgences and no major impact on the economy, hopefully Q4 will be looking a whole lot better. Thank you so much, Xolani. That's our business editor, Xolani Mbanja.